Good morning, everyone. Welcome back to the show. I'm your host and its founder, Michael Rebelo. I'm a 20-year-old entrepreneur who chose entrepreneurship over the traditional college path, inspired and driven by the goal to retire my mother and help other Main Street middle Americans just like her learn about and invest in asset classes like multifamily real estate investing. And in fact, we're doing just that. My mother was able to step away from her W-2 job in February and go full-time entrepreneurial mode with me. So I'm very excited with that. I hope to do the same with everybody else that I can help. And, talking about that, I have learned, over the past year that capital raising and sales has been my biggest forte, and I had no idea. And this particular gentleman that we have on today, Edmund Chien, I have had the pleasure of networking with him virtually on Zoom calls. Unfortunately, we haven't met in person yet, but I've gotten a lot of tips and tricks and pointers from him that have definitely helped excel my capital raising game, along with my mother's as well. So I figured I'd bring him on the show and, share the value. I don't want to keep it to myself, even though I'd rather. But anyway, Edmund, great to have you on the show, my friend. How are you?
It's great. It's great to be here.
Awesome. This has been a podcast long overdue. But Edmund, I know quite a bit about you, but what was your career like? How did you get into your career? What did you used to do and where you are now? Like, who's Edmund, basically?
Yeah, when I started in finance, or how I started to get into finance, was I was actually working full-time military, and I was generating a salary, and I had an inkling that learning about finance early was better than learning too late. So while I was literally in an army barracks, I just started studying about finance. I back at the time it was I went to the library, and the internet wasn't didn't have that much, or podcast wasn't around. So I went and I just read any book I could find at the library about finance, and I just kept digging deeper and deeper and deeper. And of course, like many people at the time, this is like the late 90s, I came across what we call the Purple Bible, which is, Rich Dad, Poor Dad. And I really just stuck, right? And I explained to people what got me into multifamily was the line that I think Robert Kiyosaki says, real estate is so simple, any idiot could do it. And I say, well, I looked in the mirror and I saw an idiot. So I figured, you know what? I guess this is going to be my thing. So I just dug deeper into multifamily, passive income, all this type of stuff. And using multifamily as the main part of doing it. So I wanted to focus in on that, and I wanted to start working with investment clubs or a private equity firm. Which, to keep a long story short, I ended up coming across. They had been around for a decade at the time. Investing very heavily in places like Dallas, Texas, all in multifamily, all for accredited investors. And I kind of knocked on their door, got a job, started out as a cold caller, and then worked my way up at that firm to become a senior partner. And we were like a $500 million in investor equity, which is probably $1 billion worth of real estate. And that's how I got that. Now, of course, that's like a 10, 15 year journey, but that's how I ended up in there.
That's awesome. And that's the thing, that just it's that inkling, it's that what is this finance stuff? I mean, I had that similar thing with my mother. I'm like, what is all this stuff? And then just getting into multifamily and just learning from that, I was like, wow, that's pretty cool. And then you just climb the ranks up from the bottom up to go, well, here we are now. And I kind of want to touch upon all of that because I mean, there's so many great nuggets to unpack there, but I guess the biggest thing is capital raising. I mean, capital raising for these big deals is obviously not the easiest thing. I think it's the hardest thing when it comes to multifamily is bringing money to the table. But I see a lot of people struggling with finding their niche market. Like, for example, we always talk about a buy box. We always have investment criteria, but we never have an investor criteria. And that's what I'm seeing. I've learned it, but I know there's a lot of capital raisers that are just starting out that want to raise capital, but they want to go bigger. So I know you've talked about, to me personally, like, what's your investor avatar? Like, who are you aiming at? Don't go for a shotgun approach. Just go straight forward, like, I guess, a sniper. So, what are your thoughts on that? Like, how does someone identify who they want to talk to? Like, how do they identify their target market? Something they can post online, or maybe a Zoom call or a networking event to go, that's my target market. That's the person I want to talk to. How does someone identify that?
Yeah, and the question that you're asking is a lot of times when I was a senior partner, I was in charge of I was a director of sales kind of thing, and in charge of the entire investor relations department. Anybody who was like capital raising in our firm, I was in charge. I was overseeing the sort of like the sales aspect or the investor relations component of things. And I would work with new advisors and people that are just starting out. And I get it. At the beginning, it's very difficult to pick and choose one specific kind of avatar, and that's fine. You go out, and that's where the shotgun approach really just starts. But then after a while, after you've raised some capital, what I would do is I would sit down with those advisors and try to see if there's any kind of pattern just yet. And what you're trying to do is you're trying to look for the lowest hanging fruit for you, meaning that where are you effective? Like if you get put in front of a doctor or if you get put in front of an entrepreneur or whatever, and you can build credibility much faster for whatever reason. And it's different for different people. And people explain it's like, well, why can't it be this? Like it's not coded. And the reason why is because human nature, people are different. And people in a specific industry, there would be similarities, and then also you're different. So I could be very effective with this demographic, but then you trying to implement and do the exact same thing wouldn't work because you're not a 50-year-old Asian guy, right? Like only a 50-year-old Asian guy could pull that off, right? And I
Right.
really learned it from my mentor. He was a 60-year-old guy when I was in my 20s, or he was 50s in my 20s. And I tried to use his pitch and it didn't work. It's like because I'm not a 50-year-old white guy, right? And or I wasn't a 60-year-old white guy. I couldn't use his pitch, and I started to realize, okay, I got to change it. But the core concepts are there, but I'm not going to be as effective in that demographic. And where will I be? And where is my niche? And once I started to understand that, I started to recognize they start to once you start to look at, whenever I get or I close these clients, and it was a lot faster than everybody else. Well, all the other clients that I've closed. Well, that might be a potential niche. Let's go and take a look at that and then try to recreate it. And is there a pattern there? And that's what I would educate a lot of the newer advisors is like, you know what? For some reason, you're very good with single mothers. Like it's like you close that in 2 meetings when everybody else it took you 4 meetings. So maybe if you see a single mother, try again and see what ends up happening. Is that a pattern? And you start to recognize, you know what? Every time I have a single mother, I can close them in 2 meetings. And it's like, great, that's your new avatar. Just double down on that and just keep going.
That makes sense. Paying attention to those details, like, pattern recognition. Like, for example, if you keep getting the investors that are just stubborn, maybe change your pitch. Or, if you're getting investors that really like you and they keep reinvesting, then okay, who are they? What's their profession? What kind of a family do they have? Where are they located? I mean, even geographically, it even matters if you really want to get specific. But you're right. It's like identifying those patterns, recognizing and then capitalizing on that. But segueing into my next question, how does somebody nurture that relationship? Because I've seen it tons of times again where people just reach out just to invest. But how do you nurture their relationships, not just as an investor, but also as a friend, like addressing their pain points and just being there for them as an advisor to kind of go, listen, I want to help you. So how does someone keep nurturing that relationship effectively while, of course, minding the end goal of, having them invest or partner with you?
This is where niching down becomes so vital and why it's critical. And I understand it is counterintuitive because when you're starting out, you're looking for a check from pretty much anywhere. So, and if you go out networking, it's just how the human mind works and how everybody thinks, right? And if you go and talk to somebody and say, well, I'm not an investor for you, but I'd love to introduce somebody to you, who would be a good referral for you? And if your answer is anybody who can fog a mirror and, that has $1 million, then they're not going to think of anybody, right? But if you say it's like, oh, my specialty is doctors that have their own private practice that have been in business for 10 years or more, right? And then it's just like you're basically playing fish. It's like, do you have any people of this? And they'll start thinking, it's like, do I know any doctors, right? And then it's in the funny thing is that people will say like I've had people like, oh, I only work with lawyers. I only work with finance lawyers. And they say, well, I have a friend. He's a lawyer, but he's a criminal lawyer. Would you be interested in talking to them? I was like, you know what? For you, I'll make an exception. And of course, you can open it. You're not going to say no. But the thing is
Right.
at least you said something to try to prompt somebody's brain. It's like that psychological phenomenon where people say, like, don't think of a pink elephant. Well, everybody ends up thinking of a pink elephant, right? That's how the mind you're priming the brain to think of a specific person. But if you
Hmm.
if you leave it open-ended, they're not going to think of anybody. Now, to develop those relationships, that's the next part that to your question, which is as you start to like really a human nature, especially when we're talking about new concepts like multifamily for people that and private equity for people that have just invested in the stock market, it's a new concept for them. And new concepts, especially when it comes to people's net worth, it's a risky endeavor and they want to say no. So it's the unknown. So if you talk in a certain way where you don't seem like a tribe member. So human nature, human society is a very tribal society. It starts in adolescence through high school. We start to develop cliques. And then as we get older, it doesn't change. It just morphs into something even more solidified. So every single industry, every single job type has its own jargon, has its own tribal thinking. So if I come in as an outsider and I start speaking a completely foreign language to you, subconsciously, a lot of people are just going to alert themselves that that's risk. I don't understand private equity. I don't understand multifamily. It's all, it's strange to me. The answer is going to be no. So when you double down on a specific avatar, what you're trying to do is you're starting to understand how a lot of people in that category think. Like, how do all emergency room doctors think? They think a certain way, they have a certain way of talking, and when you go and explain multifamily, if you can use their paradigms, their way of thinking, and their jargon, it starts to lower the barrier, it starts to lower the perception of risk is because you sound like one of them. So one of my main avatars when I was young is entrepreneurs or business owners that in the construction industry. So I just doubled down and I started learning a lot about what that type of avatar is like. So by the time I
Right.
met a new guy in construction, the question is like, wow, it's like, Ed, did you run a construction company? It's like, well, I've been dealing with construction guys for over 10 years. I know how you guys think. Because and so there's like it's like it's like you can it's like you're a mind reader. It's not like I'm a mind reader. It's because I've been talking to your peers for the last 10 years and I can sort of know how you're going to answer things before you or ask questions before you even ask them. It's because I've done it for so long, right? And it just turns into people thinking that you've got that you can read their mind. It's no, it's because I'm a specialist at your specific demographic. Like traveling nurses, for an example, they have a certain culture, a certain way of thinking, and if you can tap into that market, and then you think like that, everything you broadcast, everything you say is related to that, you will grab their attention. Right. So if that's your particular avatar, then focus in on it and double down on that. It's not to say that if my avatar is traveling nurses and then you say, well, I have a doctor friend. Would you talk to a doctor? Like, yeah, if a doctor wants to give me $100,000, I'm not going to say no. Right. You just like, absolutely, I can do it. But it's, you just specifically or focus in on one particular demographic because you get to know them even better and you become a specialist and you can close it much faster.
Absolutely. And understanding their language too is so important because you're right. Like when I first started posting about multifamily, I got zero traction because I'm like, hey, I'm doing multifamily. And everyone's like, what is that? Like I tried to explain to my friends, like, oh yeah, this is, the cash on cash, the IRR. And they're like, what are you saying? Like they had no idea. And I'm like, oh wait, I kind of have to talk in their language, kind of give them a frame of perspective of how they would see it. You almost have to I guess, embody your target avatar to go, well, listen, you're in a W-2 job, you invest in a 401k, but you realize that you could take that money, right, and invest it into multifamily. And like, you can. So it's basically another investment. Of course, it has risk. So instead of you invest in the stock market, you can invest in something like this. And when I figured that out, my language changed completely. The way I approached investors changed completely. The posts I made changed completely. And it always ties back to that language. Like, for example, my target avatar is my mother, people in W2 America that want to figure out, is there more? Well, how do I talk to somebody like that? I don't know. How does my mom talk? How does she think? And I kind of had to sit down and interview her to go, well, how do you think? How do you talk? And she's like, these are things I worry about. These are things I think about. This is my job. This is how I think about my job. I juggle. And I'm like, and I'm over here just writing everything down. And I'm going, so how can I apply that lingo into my capital raising strategies and change the trajectory completely? And when I started to read them, I'm like,
100%.
oh, there's not like all this, nonsense in here. Like we look at this specific cash on cash return because I'm like, no, this return matters because if this return is above this return, that means your cash will be doing better. And therefore you'll be able to spend more time with your family. That's if all goes well, et cetera, et
Yes,
cetera. And I'm like,
100%.
whoa, like just completely mind blowing. So, yeah. And psychology too. I mean, it's a very underrated thing in capital raising. Everyone thinks it's just sales, 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 just get them to say yes. But there's a lot of psychology behind it. Like, what's their pain point? So, I guess kind of talking on that, how do you listen and how do you identify somebody's pain point truly? Like my mentor, Russell Gray, he's always talking about, talk to the heart so it can send a signal to the brain. But I don't think a lot of people still understand that. Like, how do I identify their pain points? You can't just directly ask them, what hurts you? What are you suffering from? Like, what makes you itch at night? But I guess what is the power of identifying the pain point and also listening when it comes to talking to these people and also just pretty much anybody in general?
Yeah, and I think that's the importance of being very specific to your avatar. So, avatar development is it's not a science, right? It's basically looking at the way I explain to people is that you want to be you want to be tight enough or specific enough where you're targeting one demographic of very similar thinking, but not so tight that there's only like five people that fit that category, right? So it's a balance between the two. And when you get there and you start to specialize on that in that specific demographic, then you start to already understand how they think. And you can like the first couple times you do it, you may have to ask, and you might screw it up, and you're not going to close. But at least if you're not closing and you're missing it, at least gain understanding of why you didn't, or what they're, or try to burn it and try to figure out how they think, and then see if the next person that's similar thinks the same way. So I'll give you an example. I got to the point now where my avatars were baby boomers. So at the time they were, late 50s, early 60s. They had, typically they were on their second marriage. They had adult children, blended families. That's so cliche, right? And so I would walk in and it's just like, and I would talk about these certain things. They didn't mention anything. They didn't know anything. It's just like, for some of the things of why multifamily is so important is it's very valuable for blended families. So it's like, what do you mean? It's like because you have adult children. Say, for example, we've got clients with adult children, but then they've got a new family with a new wife. And so there's families that are all over the place. And what multifamily does is that it starts to send in cash flow so that you can direct it for certain things, but it's essentially designing a pension plan for families. That's what a family office is it's a pension plan. And multiple people can be part of it, and you can direct it in certain ways so you can look after many different families, right? And all at the same time. And then, of course, 9 times out of 10, I would be speaking into what their life would like. And there's like, it's like you have an open book to my life. It's like, well, that's because I know that if you're in construction and you're like 50 years old, you're probably on your second marriage. Like 90% of them are on their second marriage, and they've got adult children that are either working in the company, or either lawyers or working elsewhere. Right. And then you just kind of, and as you start to get to know them more, you start to dig down deeper. You start to already understand where they're coming from.
Absolutely. So, I mean, and that's the biggest thing. It's just listening and understand their pain points and basically almost embodying them. I said this earlier, but it's the point of like, seeing them where they're at and just understand their lingo. I think that's the biggest takeaways that I have so far. But I guess to wrap up our episode, Edmund, what would you say for someone that wants to get into capital raising or someone that wants to do entrepreneurship and they feel like capital raising is their forte? What are, I guess, kind of a list. What are the things they should be doing right off the bat, and what are the things they shouldn't be doing right off the bat?
I think really doubling down on a lot of sales training. And the biggest part of if you want to be a capital raiser in finance, I would leave them with this takeaway is jargon is the biggest thing that will either get you into the club or exclude you, which is speaking two different types of jargon. One is speaking the jargon of finance and being able to talk about those things and truly understand what that means, and then being able to speak the jargon of your avatar. So speak their language as well and be able to bridge those two, right? If you can do those things, then that will start to solidify yourself as a true pro or make you sound like a true pro. And that's the biggest part that I see lacking in people that are maybe sub 5 years in capital raising. They focused way too much on technical details, not enough on the benefits. So far too much on features in the using sales parlance, focus way too much on features, not enough on benefits. Benefits are emotional based, and that's where people start to fall down.
Absolutely. And I concur with all of that because if you start to, I mean, I did it. I've talked about it already to say, like, okay, let me just throw all these returns out there. People will get it. They don't. They don't. Some of them don't even know how to read, like, their how their CDs are performing, let alone how are they going to understand what IRR means. And I'm like, oh, I never even thought of that. So yeah, it might get you into like good clubs, but maybe not the right ones, or you might be excluded. You're right.
Mhm.
But I think that's a great way to wrap up the episode. Ladies and gentlemen, if you want to learn more about Edmund, what he's done and what he's doing right now, please check the description below. Follow him on LinkedIn as well. And if you want to learn more, check the description. Follow us for more podcasts on capital raising and all, not only that Main Street America. But anyways, this has been a great episode. To my audience out there, build yourself better and bigger every day. Live better, live bigger. Always move ever forward. Edmund, thank you so much for dropping your wisdom, and thank you so much for being on the show. It's been a pleasure.
My pleasure. Thank you, Michael. Thank you for having me.
Of course.